Hussbus bus stop. Hello, JP Hussey here of the Hussey Team Mortgage Advisors with this week's Hussbus bus stop. Hope everybody is well. I am actually down on vacation. We go every year. My mom's birthday and my wife Rachel's birthday are back-to-back days, so I got to give the two most important women in my life some time, which is good. And this brings me to my first point. Make sure you get some rest. Make sure you reset. It's very important. Very important. I believe, and I've been saying this for a while, our brains are just have not evolved yet to where and how fast this world is moving, right? So you got to make sure you get that reset. It's really better for yourself and everyone around you, I'm telling you. Get refreshed, get back at it. So I'm glad I'm down here. But brings me to a point. Still have to be efficient, especially when you run a business, right? I mean, let's just be honest. People need to, and especially in our world, they need to get things done. They have certain deadlines. They have to buy houses on time. Just because you're on vacation doesn't mean they are, right? So one big thing that we've done is we've implemented, we've always had a team at the HusseyTeam.com email, which goes to all of us, all on the sales team, right, and processing team. But we also implemented the Hussey hotline, right, which is you can call or text it to get quick answers to things, right? We can even put some documents, some photos in there, some links to help you out, because let's face it, a lot of people are on their phone, most people on their phone, and they text a lot, right? So make sure right now you lock in the Hussey hotline number, which is 484-353-6141. I'm sure Lindsay will put it up here somewhere, right? Maybe right in there. I think she could do it. So anyway, make sure you reset. But make sure the people you're working with, whether it's mortgages or anything else, are trying to be as efficient as they can. All right, that's what we've done. Put in some efficiencies so we can counteract that speed the best we can and still get some rest. All right. Second thing I want to bring up is let's talk about those boring mortgages, right? Mortgages suck. We all know that. I'm going to be straight up about that. It's a necessary evil, right? So let's talk about this real quick. Couple different points that we've thought about this year. So first things first, make sure you're working with someone that's going to be as honest up front as possible. I hate saying that as possible, right? But numbers change sometimes, all right? So you want to get a good estimate. Now, ever since 2008, and a bunch of bait and switches going on where people say, oh yeah, it's only going to cost you this much, but then you go to closing, you have your moving van out there, moving truck, and they're saying, oh, you need an extra $10,000, right? That can't really happen anymore, all right? As it shouldn't, right? There's different buckets, different tolerance cures, okay? Where the lender or myself, our company, needs to eat certain fees if we tried to under-disclose, right? Big one is transfer tax. We just got bid on this one because something changed and someone didn't tell us. Now, I'm going to take all the blame for that, but someone didn't tell us that there was some extra transfer tax, because it's a deal that's happening right now, paying both sides of transfer tax if you're in PA. We just got hit for one, right? We didn't disclose it. We didn't know about it. We would have disclosed it, but guess what happened? Client doesn't have to pay that extra $4,300. We did. We had to pay $4,300 because of really someone else's error. Now, we could have caught it earlier. I get it, but maybe some people weren't as efficient. I'm not trying to blame anyone, but it happens. We have to eat it, right? So this comes to a good point. There's certain buckets, right, that protect you, the consumer. But there's a bucket that's not protected, and that's taxes and insurance for like escrow. Ready? Right? So there's still companies out there that might not show the money for escrow that you need to help to put into a kitty to pay your taxes and insurance when they're due, right? If you escrow taxes and insurance, that's not a tolerance cure. They don't put that in there, and maybe you need another $6,000, $7,000 for taxes, let's say, right? That could pop up at the end. That's not cool, right? So if you're escrowing, you got to make sure that the right amount of money is there from the beginning that you're estimated for. That's why we do personal budgets. That's why we say, just tell us how much money you think you want to spend for this. Let's structure it that way. What's your monthly payment? What do you want it to be? Let's structure it that way. It's a puzzle sometimes, no doubt, right? But that's definitely one thing you have to be aware of. Now, I've seen some policies going into place where they're trying to change that because they know other lenders are doing it, right? And other people are doing it, right? They're trying to put that into place, right? And I hope so, but you got to be careful for that. So if you think you want to have your taxes and insurance escrow, which means they're part of your payment each month, means they're paid for you each year, right? It's like rolling. Your payment just keeps putting money into there to pay those taxes and insurance. If you're doing that, make sure your lender is estimating that on their initial loan estimate, all right? Because that could come back to bite you in the end. No doubt about it. Last thing I want to say, right? 3 different types of occupancy, right? There's a lot of fraud out there, by the way, right? 3 types. You got a primary, where you're going to live. You have a second home, like a vacation home. And then you have an investment property where you're not living, probably renting it out. Maybe you're going to flip it, right? They all have different pricing, right? Because it's all risk-based pricing. So I think of it like this, right? People go, why are investment property rates higher than primary mortgage rates? Well, I say this, right? Let's say, God forbid, something happens, right? You lost a job. Money's just not coming in. Inflation's going crazy and you can't pay for things, right? Which one are you going to pay first? You're going to pay your primary, right? Because that's where you live. You're not going to pay your investment property if that's going to be last resort. You're always going to be paying for where you live. You got to keep yourself and your family good, right? So investment property rates, all right, are always going to be a bit higher. I want to say almost a point higher or so, all depending, than a primary residence. And usually second homes are they're based around like primary mortgage rates. So you know, it might be a little bit different, but basically the same. All right, so there's some info for you. I hope you reset. I hope you get some rest. Happy 4th of July. Have a great day. Hussbus, bus stop.